What's up, you guys? Welcome back to another video, and today we are going to be discussing the housing market. I made a video about a week ago talking about the potential mortgage crisis that we may be facing after JP Morgan just announced that they're going to be tightening up their criteria for folks looking to get a new mortgage, and now I want to go a little bit deeper into the current situation and talk about what we are seeing happen across the board in the housing market. Before I get started, don't forget to subscribe to the channel and leave any video ideas you have in the comments. So let's get into it. Now, I work in real estate here in San Diego, so I'm going to be using the numbers here in San Diego just as a test sample. So just keep that in mind that the numbers that I am going to be sharing in this video may not reflect you and what is happening in other markets around the country, but I think this gives us a pretty solid representation as to what is happening across the board in the housing market as a whole. So if you haven't seen my video about how JP Morgan is tightening up their lending criteria and how that could lead to a pretty big problem, go check that out. I talk about how Chase is temporarily requiring a 20% down payment and a 700 FICO score for anybody looking to obtain a mortgage right now. And as of now, I believe that they're the only major lender who has issued this strict of a policy, and of course it's only temporary, but when other lenders decide to follow suit, and if this global pandemic we're experiencing continues into the summer, we could for sure see a situation where it is almost impossible for the average homebuyer to obtain a mortgage. Now, I know that sounds a little bit scary, whether you own a home and are wanting to sell this year, or you are hoping to invest in a property over the coming months, but let's take a step back and understand that this is only temporary, and if you are thinking that maybe you just won't invest in real estate at all after this experience, I'd think again. Real estate is one of the best investments you can make, and unlike other investments such as stocks, you can guarantee that the house you will buy will always command some sort of value because real estate is a hard asset that can never really fully lose all of its value. This is different than investing in a stock where the company could very well go belly up, losing all of your money. This is not going to happen with real estate, and one of the reasons why I love it as an investment. With that being said, I wanted to share with you a few numbers regarding the housing market to give you an idea of where we stand and what is happening with home sales as we head into May of 2020. So obviously, as to be expected, home sales have taken a massive hit over the past few weeks as it is a tough time to sell a home. This is partially because lending criteria has tightened up and banks are stalling certain financing, but also because we're going through a pandemic that is keeping a lot of people at home and away from viewing potential properties. Lots of realtors are using FaceTime to virtually show homes, but in reality, most people are not going to want to buy a home until they have a chance to see it in person, which is not possible for most people right now. So between those two things, we have seen quite the dip. We don't have any sale price numbers as of yet to reflect what is happening. We should get some data sometime in mid-May just to see what's happening with home prices and how they've been affected, but as of now, what we do have are the number of homes going into escrow compared to the number of homes that went into escrow last year during this month. San Diego County as a whole is at 38% of what it was at last year in terms of number of homes going into escrow, which is not really terrible considering what we're going through. So that means for last April, every 10 homes that went into escrow, this April we only have 4 homes going into escrow. So homes are selling, homes are going into escrow, but obviously at a much slower pace than last year. So let's look a little deeper and see what types of homes are still selling and why that is. We'll take a look at 2 different segments, and shout out to Gary Kent with Keller Williams, who initially posted these numbers on his YouTube channel, and I think these 2 segments of the market can give us a good idea of what is happening. First off, let's look at homes that are in the $500,000 to $700,000 range. Now, that might sound like a lot to you depending on the part of the country that you're in, but here in San Diego and throughout Southern California, that's actually on the lower end of homes based on the average income and the overall wealth here in Southern California. Homes in this price range were actually 42% of what they're at last year, so again, above the county average and not terrible considering everything we have going on. However, now let's look at homes in the $2 million plus range, so think La Jolla if you're familiar with the San Diego area. Homes in this category can typically be referred to as luxury homes, and are at only about 15% of what they were last year in terms of homes going into escrow. Obviously, this is much lower than the county average. Now, this makes sense to me because people that are buying $2 million plus homes are usually not in a rush, and frankly, they don't have to be in a rush because they have much less buyer competition, and homes tend to stay on the market longer in this category. These are typically wealthy individuals who are looking for a personal residence, and they want to take their time to find a house that actually makes them feel at home, and obviously, it's hard to get a sense of that if you can't can't actually set up a showing for the property. With the lower priced homes, typically you have more competition, so buyers are willing to gamble on making an offer for a place because they know that there's probably 5 or 10 other people that are also wanting to put in offers for that same property. We also see a lot more investment properties being purchased in this price range, and investors are much more known to put in offers without having to see a place or doing a whole lot of due diligence before putting in offers. They know they can put an offer in with certain contingencies, and if those contingencies are not met, they can just retract their offer for the property. They are also much more concerned with the price and the practicality of the property and don't particularly care what the home looks like or how it actually makes them feel because they're simply looking to make money on it and they're probably expecting to put a bunch of money into renovating the place anyways. So that's what we're seeing thus far, and it's pretty on par with what you'd expect. When we go through a crisis like this, most people stop thinking about making big purchases like a home and start contracting and thinking about more basic needs. That's just human nature. What happens next is what is going to be very interesting. We have not yet seen a large rise in inventory, which is what you'd normally expect to see during the beginning of a recession, but I believe the reason for this is because the housing market does tend to lag a little bit, and we are at the beginning of what could potentially be a very long-term economic crisis. The government has also implemented policies forbidding any banks or lenders from foreclosing on homeowners at this time, so people that normally would have been forced to put their home on the market due to job loss are now being given mandated forbearance from banks and have not yet put their homes up for sale. But as this thing moves forward with full steam, the economic problems that a lot of people are facing are eventually going to catch up with them. The government can only step in and do so much. For the people who are not currently able to make their mortgage payments due to this crisis, you will be able to keep your home for the time being without making payments. Some of this is mandated by the government, and some of this is lenders and banks issuing their own forbearance policies, but as soon as your forbearance period is ended, it's not like those months of just not making any payments just disappear. You're basically creating a backlog of unpaid mortgage payments that you're eventually going to be responsible for once your forbearance period is up. If in 3 to 4 months people get back to work and start paying again, they may have a backlog of a couple months worth of mortgage payments that they're on the hook for, and depending on how harsh or lenient your lender decides to be, you may have to come up with all of that at once in order to stay in the home. Now, some lenders may be friendly and allow you to structure all the back money you owe into payments, or maybe they'll just allow you to add all of the missed months to the end of your loan period, but we just don't know. Foreclosures and forcing people out of their homes really isn't a good situation for anybody. The homeowner loses money, the bank typically loses money, so I have a feeling that there will be some leeway given to homeowners in order to keep the borrower-lender relationship intact. But who knows how many people will even have a job months from now when the government and lenders say it's time to start paying your mortgage again. We all know the global economy is changing, and many jobs are going to disappear throughout this pandemic and never return. We will without a doubt see a period of time where a portion of our past economy workers are out of work and forced to find new roles to play. So with all this being said, we don't know what's actually going to happen. I can only imagine we are about to see some home prices drop because buyers are more scarce and lots of people are going to be forced out of work permanently in the coming months. But again, we just don't know. I'll continue to create content to keep you guys updated with the real estate market, both here in San Diego as well as throughout the country. Please reach out to me at alexknowsrealestate@gmail.com, or you can just text me if you'd like. If you have any questions whatsoever or would like some advice on how you can capitalize on this upcoming market shift. So that's it, you guys. Thank you so much for watching this video. Again, if you want to reach out to me, you've got my contact information. Also, be sure to hit that like button down below. It really helps me as I'm trying to grow my audience and expand this channel. And if you want to join the community, hit that subscribe button down below. And of course, any comments whatsoever, questions, comments, or suggestions for video ideas that you guys want to see me cover here in the future, go ahead and leave that in the comments section down below, and I'll see you in the next video. Have a great day.